great. So we'll start with a few Q&As with Anthony and then pass it over to Joita.
Any questions from anyone? All right, then that was a very, very short Q&A. I'll just tell you anecdotally, nothing to do with metrics or revenue, that for the last year, I've been exhorting our SeedLegals team in the nicest way to head back to the office, bribing them with lunch in the park, cakes and so on, to get people who want to be in the office without any push. And this morning on the call, on our Monday call, team stand-up on Zoom, I said, do not come into the office until the mad spike has died down. If you want to come in and you don't need to take public transport, go for it. But actually, oddly, Freedom Day seems to be kind of the opposite, which is you're much better off for a little while staying at home. So anyway, and now over to Joita on demonstrating that you can make revenue. Over to you. Thank you.
Oh, that's a really tough one. You guys chose me for the very tough topic, the one that, you know, everyone's obsessed about and probably stuck with. Shall I do a little bit of an introduction? Is that okay? Okay, great. Well, first of all, thanks, Purdy and Margaret, for inviting me. This seems like a really exciting session, as I can already see Anthony was wrapping up some interesting bits here. Wish I could join earlier, but coping with COVID and then a little baby in the exact same time, which is not super easy. So kind of managing. Okay, so about me, what can I tell you? So I started out as a techie, ended up being an entrepreneur completely by accident. Actually, the techie bit was also accident. I was always a physicist and was studying for it all my life and didn't plan anything else, but ended up getting recruited by the Valley. So just became a programmer, didn't think about it because I was using a lot of programming for my physics anyway. So it seemed like a next alternative step, not a natural next step, but an alternative step. And then when I went there, I found that the company that I was working for, Cisco, had a bunch of VPs who were wanting to make a startup. So I joined them. That did have a decent exit. Then I tried to make another one that didn't work out very well. Then I made another one, which worked out okay. So kind of like a mixed history. The other hat that I wear is of an investor. So interestingly, not just as an angel, actually not so much. I'm not so prolific as an angel. I've done really small things. I'm mostly an advisor to lots of funds that invest in deep tech that are in Middle East, in Canada, US, definitely a lot of West Coast. And then now a little bit of UK as well. I'm a venture partner at Superseed. Associate venture partner at Superseed, and also I have a couple of other platforms where I kind of enable investing in various ways. And the only other thing worth knowing about me is probably that I'm really, really passionate about democratizing access to capital for all groups, specifically underrepresented groups or segments that historically have not had easy access to financing for various socioeconomic reasons. And I really like a systems thinking approach on solving them. And I'm always engaged in some forum or some policy somewhere in the world, in DC or elsewhere, where I'm really talking about it or working on it. It's just something that I really care about. So that's about me. Maybe we should jump straight into the session and not waste any more time on me. This is just to give a bit of context. So how shall we do it? Do you, Purdy and Margaret, this is more for you. Do you think I should go through the topics that you gave me in the list that you did, or shall we be a bit free for, like, how would you like this?
Yeah, let's do it that way and then open it up to Q&A.
Okay, so shall we do Q&A at the end, or is it okay to open up in between?
Yeah, let's, we usually invite people to just add their questions into the chat, and then Purdy and I kind of aggregate the top hot topics and feed it back to you at the end. But you can also answer questions as they come in or change up the format however you like.
Okay, great. I'd probably make it a bit more interactive and stop in between and ask, so I know what the room is like. Okay, great. Okay, so where's the list of questions that you sent me? Yeah. So the first question that you had, well, the topic, can your startup make money and can it keep making money? I have to say this is a tough one because even when you think it does, it sometimes it doesn't, because I have failed at one and I thought that it's definitely going to succeed and it did not. And it was an absolutely devastating and ridiculous failure where afterwards, in retrospect, we're also wise. And I said, that wasn't going to work anyway, but I didn't know that, did I? So this one is a tough one. But when it works, of course it works. So for first one, how can pre-revenue startups show investors they have the potential to monetize? So I'm going to say the first thing, and probably take it with a pinch of salt, because obviously the first advice for me to all of you is don't take unsolicited advice and advice you don't stand by, because you're always making your own rules. And so if I say something that does not work for you as an entrepreneur, you don't have to take it. It may not be true for your reality. That being said, the first thing I'd say across all the questions I'm going to answer is please take geography into account. So whether you're in US or in UK, or you're in a different part of Europe, like you're in Germany or France or Northern Europe or maybe southern Spain, where you are greatly matters, because the criteria that geolocal funds apply to invest in you will differ. That being said, I don't think we should look at every answer as like, can I be investable? It may just make sense for the business. So I'll try to answer from both points of view, how to make yourself more investable, given I'm so engaged with the VC. But at the same time, regardless of being investable, if you make a good business, I guess it just makes sense. So let's get to that first. How do pre-revenue startups show investors their potential to monetize? I would say this kind of highly depends on two things, the unit economics and who exactly would you eventually be selling to, okay? I think most of you here are raising seed and pre-seed. That would be right? Like there are no Series A's here, right? Yeah, okay, so mostly a seed and pre-seed. So for seed and pre-seed, you'll have to show some level of monetization, and you will most likely be just early revenue or pre-revenue. Because if you're really advanced revenue, then obviously you would be raising an A, and beyond that a B. So at that stage, the potential to monetize is a mixture of two things. If what you're building is of such a plan, for example, deep tech, where you certainly cannot monetize very early stage, then the very clear unit economics of what's going to happen when you do, and breaking it down to bite-sized pieces and having very high clarity. Because what investors like to see is, even if you do not have revenue, do you have really high clarity on every piece? And we may not always give you feedback at everything you say, that this is not exactly how it works, but we do make notes. As you notice, we're constantly taking notes. We're saying, if it tallies up with what we know about the market. So it's important that you know and you break it down into bite-sized pieces. For example, you are a startup. I'll take 2-3 different examples because I think there's a range here. If you are B2C and you have just started monetization and it's a really small MRR or whatever it is, then at least can you share how did you arrive at that segment very clearly? What A/B testing did you do? Okay, you must have had a lot of free users in the beginning. Who were they and who are they right now? And what's your biggest champion? And if we do an individual back check on those people, regardless of the ones you introduced us to, or ask someone who's a potential user to review it for us, what do you think they'll honestly say? And they're not going to say all great things. That's perfectly fine. But do you have a balanced understanding of the things that they will say that are negative? Because obviously you need capital to fix that. So that level of clarity is very important to show that even though you're pre-revenue, you have the mindset and a very clear path to making revenue. And if you have made revenue, for B2B, there is the potential to have a little MRR, even at seed stage, to be honest, but it would be very little. And even if it's not MRR, if you have just revenue and you think it's decent proof of where you're going to go, then that works as well. But again, it will depend upon how clear you are. So if your ticket size is really small for each sale, then what's your ACV? How do you go to market? How soon, realistically as well as optimistically speaking, 2 scenarios, would you get to a point where you will go from where you are to making actual revenue? Because what seed investors are trying to see is, when would you be raising A, right? Because that's the next step for them to see you can get there. So what is that? Knowing share of wallet. If you're B2C, where do you sit in the spectrum? And how do you know you're going to get that share? Is it a place where there's a lot of competition? At least are you aware of it? There's nothing wrong with being in a very crowded space, and there's nothing wrong with being an early entrant as well. We have seen winners in both places. All we really care about is, are you aware of it? So if you have a lot of competition, we think so, and the first thing you say is, I don't think there's any competition, that would be worrying. But if you say, I am aware of the competition, but this is how we differentiate, and therefore, even though I'm pre-revenue, I know that I will be able to make much more, by executing the plan to differentiate myself from them. These are the few things for larger ticket size B2B. So if you are selling or going to sell into customers who are going to take large chunks, and they're going to pay you a substantial amount of revenue beyond 10, 15K per ticket, let's say 25K, 50K. So then do you have, and that ties into the third question, I think here, then do you have some logos that can vouch for that? We are in paid pilots, they're pre-revenue, but when we finally get to paid, this is how much we're gonna pay. Because that gives us a good sense of the amount of energy you've invested. Is that going to actually give you something? So if you are investing a lot of energy into getting into a big player, and they're only going to pay you 2K, that's okay to start with. It can even be 0. But in 6 months' time, can you get into something else of the same size and charge them 50K? Because if you continue to put in this much energy to acquire these customers and they're never going to pay enough, then there's no ROI. And that's not going to work. The second thing is, what do you say? The economy of scale. So if it costs a lot for you to sell right now, which is always going to be at seed, how is this going to go down over time? What levers are you going to demonstrate on the various channels? How are you going to be better and better so that each sale costs you less? Because eventually that's the path to profitability and a good business. What revenue metrics? I think I had a question here. If anyone else wants to write, please do that. And I just saw a question here. Could you please cover growth signals, pre-revenue, B2B, enterprise products? And this is from Simon. Okay, Simon, for growth signals, quite a few things. So a lot of the things that you provide will be straightforward, like your customer due diligence, and you're going to make introductions and things like that. Then there are a few things that investors do anyway, at least most. So that would be giving the product to a potential target user. So you're going to describe, this is the kind of customer that is my potential customer. And then you're going to make introductions. But the type that you mentioned, we can go and find independently a type like that we may be connected to. Most of us are well connected. And then we're going to check, do you think this is something you would use? And we would take that feedback. So when we ask you, who are you potentially selling to, and you describe the template, it's good to be specific and good to be thorough and point out caveats. You cannot know everything at seed stage. I mean, none of us did. Many VCs are ex-entrepreneurs. I'm still a current entrepreneur and a VC. So we are fully aware of the difficulties, and it's okay that you don't know, but let us know. If you're describing something with great confidence, then that's the profile we're going to go find and check and ask, like, do you think this is a product you would use? And this we may do in addition to checking with your introductions that you've made. So this is a growth signal. The other growth signal that is important is usually even if you're very website driven for your sales, just everyone in some way, unless for some strange reason you're not, that will be important. And it's not just, the free Google Analytics. There are lots of tools that are out there. And not all of them are heavily used by startups, but the investment family, like PEs, hedge funds, investors, like VCs, we all have access to other tools as well that give us a decent sense of what's actually going on, regardless of what you're quoting. So checking internet website traffic, checking traction on your app, these are all possible through lots of tools that investment community tends to use. So that's a growth signal that's hard to fake these days, because we can literally just go there and see. If you claim that you had 5 million visits yesterday after your new release, it's very easy for us to check if the app had that at all. If you had like 5,000 hits, there's no way you had 5 million visits. So those are growth metrics that are hard to fake. They're just metrics that will come out naturally. And the third one is a bit weak. I'm not a big fan, but I'm sure there are investors who are a big fan. It depends. Is the type and quantity of PR you had. Be very careful. I'm caveating this by the fact that if you just paid a reporter in Forbes to cover you, investors are aware of what's going on there. That's different from an original, genuine coverage because you match a certain topic and something like that. So just being on some publication that we've hired a PR agency for doesn't really cut it. It might give you some hits on your website, which is what you're aiming to do, and therefore it's a marketing channel, and you discuss that with us. That's great. But if you just hope that article is going to help reinforce your traction, growth metrics, signaling, it usually doesn't work like that. Hopefully that answered some of your questions. So what revenue metrics matter most depending on the stage and type of business? MRR, revenue, pre-ordering, sales, paid trials, contracts. They all are dependent upon the type of business you make and what will be most important to you as a business. So if your entire business is going to be about MRR, that's your whole business plan. Then at seed stage, you may have lots of non-MRR contracts, but maybe one MRR. So it really depends upon what type of business you are, and can you showcase a small piece of it? Like they say, how do you eat an elephant? A small piece at a time. So whatever is your plan, the word seed is a condensed form of a plant. It hasn't come out yet. But if you condense your business into this small piece, what can you show? So all of these would be relevant depending upon who you are. But obviously the MRR is really exciting, especially if it's SaaS. Pre-order sales, paid trials, they're all good for deep tech or things that have really large ticket size. So we don't expect you to have made a sale worth $500,000 in pre-seed, but that's the potential. Then do you have a few paid pilots, or do you have some signed pre-order contracts which are free for 6 months, but afterwards will convert to 150K? Because if you're saying the potential of your contract is so big, think about it. Just place yourself in the shoes of an investor, okay? Like literally. If you're saying I have the potential to sell something for this much every single time, shouldn't there be some signs of it right now? The sign cannot just appear overnight. There must be some sign. And if you're saying the sign will appear a year from now, then you're too early. Then you need to wait a little bit to fundraise, because there has to be some symptom. And if you think neutrally, it makes sense. When I was a founder, the very first time I was, I think 21 and a half. And honestly, a lot of these things did not make sense to me. But over time as a founder and also as a VC, I think I can see that if you step back and then pitch, you'll only say common sense. So just apply your common sense. It's easy to be passionate being a founder about your business and hard to remove that. And you shouldn't, it's the fuel. But if you step back a little bit and think about it, does it really make sense you're going to sell something for 150K and you haven't had even one paid pilot or 5K, but you're ready to fundraise? It's kind of hard. So if that's true, that is your case, then what is the proof? Like, what do you have to prove for that? So usually then paid trials or pre-order sales, or even what you say, letter of intent could be good. But remember, the lighter the evidence you're providing of revenue, the deeper the due diligence is, right? So then the more we'll talk to those customers and the more time we'll spend on it individually, checking in the market, checking a friend who's really good at that sector. What do you think? Should we look at it? So we'll do deeper due diligence. And the more evidence you have of clearer traction, monetizability already happening, then, it's easier to make a decision. Then what pricing mistakes do early stage founders often make that impact their revenue? Quite a few things. Some questions, just to say this piece and then go there. So one thing is, it's not etched in stone. Don't go with your pricing thinking that, once I say this up there on my website or on my, I don't know, my limited trial on AppSumo, or I'm just, selling on a channel, I'm not going to be able to change. It's not true. first few years, people experiment with pricing like crazy, especially all good startups. They do. So don't worry at all about experimenting, and don't etch it in stone. As soon as I write it on the website, what am I going to do? No, don't worry. Just go ahead and experiment. One thing to be careful about, if you have an experiment in which you're selling to a few thousand people, and then you drastically change the pricing so that they feel shortchanged, well, legally nothing to be done, because obviously you've covered your T&Cs. I hope so. But morally, it doesn't look great. And if you lose credibility in amongst your early ambassadors, it just doesn't look good, because people talk in these communities, Quora, Reddit, and Twitter, and they'll be like, I bought it for £30, but just look at what they're doing to the next set. It's £3, you know? So if you're going to make a drastic change, then what you do is you write back to all the older set and you compensate. You give them something free, or say thank you, or a future note to buy at a discount, something. You have to do that. You may not be legally obliged, but you know, the days of shortchanging boomer corporates are gone. These days, it's transparency and solidarity that's more appreciated by the community. So don't do disastrous things. Shortchanging does not work. But that being said, please experiment. So the biggest mistake you can make is thinking your pricing is set in stone, and now that you've written it on your website, you can't do anything about it. It's not like that at all. Feel free to do that. And then I'll answer some questions. Omar, how do you define deep tech for B2B C, CapEx versus revenue? We are building discrete MVPs like neuroscience tech, which will be clinically trialed and in commercial version target patients. We never use the term deep tech. Would it matter? It's totally up to you. It's your business. What you want to call it is up to you. But what you're doing is definitely deep tech, because you're in a clinical trial. That by definition is deep tech. How do you define it? Well, there's no Investopedia legal definition that people follow. By and large, most of us who come from the background of deep tech, one would imagine we have some sense to look at it and identify. So in that sense, it's a bit ambiguous, but it's really not. Like, deep tech is tech that you cannot monetize right away, that has had a lot of IP thrown behind it, has potential of patentability. Even if it's not patentable, it's at least the kind of tech that's going to take at least a year or two to build. CapEx versus revenue. Deep tech, we don't expect revenue. We know CapEx and OpEx is heavy. Please be mindful. There are very few deep tech funds in Europe and UK. There aren't that many, because deep tech signals a high risk appetite. Your horizon to get returns is pushed out further into the future, and there are not many funds like that. If you were in US, I'd say, great, hallelujah. But here, because I've done deep tech a couple of times, it's a bit hard. There are only very niche sectors as specific investors that do it, and you need to fit in their mandate, which is why I said in the beginning, please take geography into account when you build anything. I know, given we say the word startup and we almost forget that startup is business, and business is an age-old term. Startup is a type of business, but it is business. And the fundamental definition of business is it is an institution that runs across multiple pillars. From policy to geography to financial institutions, they all cross-section to make a business. So if you don't take geography into account when you build something, you're not looking at the fundamental definition of a business. So I would say, if you want to get funded here in Europe or UK, then look at the list of funds and look at their investment mandates, and you'll get a very clear sense of what deep tech is, and what they consider deep tech. Because let's face it, for all intents and purposes, for you, deep tech is what it is to them, right? Because you are dependent on them. Deep tech does not make revenue. So unlike something else, you can't go by without funding. So look at their definition, and if that meets yours, then you're good. But largely, deep tech, we're aware, does not make early revenue, which is why many funds will not invest, and they don't have that risk appetite. I'm a big fan. That's where I come from, and I love it. We don't necessarily do it in Super Seed, but we do a different type of funding, and we do amazing stuff there. But I don't think we do that much deep tech, not yet anyway. But there are other forums I'm associated with which do. So if you are into deep tech and you would like to have a chat, get in touch with me on LinkedIn. I can connect you to platforms that do this. Like I say, be warned, there are not many. but you are deep tech, there's no doubt about it. The next one, are there some generalized times to go from seed to Series A that investors look for? Really interesting. Maybe split angel versus VC. So Fitbit took many years, I think 7 or something. And I just found a startup took like 8 months. So we know the range varies. And by and large, people are flexible to the extent that it makes sense. Okay. If you're going from seed to A in more than 5 years, then there better be a really good, consistent, backable story. Okay. Ideally, 2 years, 3 years is average. 18 months, 24 months is good. Less than a year is like, whoa, super good, or crap, because you might have blown the valuation, done something ridiculous, or it's great. One of the two, but it's an outlier. 18 to 24 months is very good. 3 years is starting to get into the bell curve and the second half of ish. I think 3 to 5 years is you're starting to, okay, it's taking time. Is it deep tech? Is it hardware? What is it? Okay, there have been some internal changes. Okay, it makes sense. Okay, it's good now. Beyond 5 years, better have a great story. Beyond 7 years, better have a superb story. It's still possible, but you're like the tail end of the bell curve now. If you look at US, though, there are lots of algorithmic funds investing now. And one of the things that the algorithm pays weight to, and I mentioned this because I'm a really big fan of investing data-driven manner, and I advocate it wherever I go. So the algorithm tends to have a baseline because it's a moving average, right? Every year for your sector, whatever you are creating a startup in. And so it will automatically know if you're within the level or not. But that's very few funds. 99% of them are not going to probably use these methods, but those who do, they will be aware that there has been a range of change. Beware, I've never seen anyone turn down a deal or not proceed because it took longer. The only thing is we're going to ask them what happened. This is not a, it's going to do it or die situation, but it's one of the factors to talk about, important ones, like cap table. So it's one of those things. We'll talk about it, but it's not going to be the reason to turn something down. If something's great and interesting and attraction, but for some reason there's a long plan for you to go from here to A, we're going to have a chat, but it's probably not going to be a no. For pre-order sales, is there a rule of thumb for proportion of future ARR that is required to be credible? I think it totally depends upon the fund, their policy, and who's investing in you. There's no blanket answer. I'm aware of fintech funds with a lot of people from McKinsey consulting backgrounds who probably have a rule of thumb. Then I'm aware of lots of funds who have dynamic investing and lots of entrepreneurs inside who are willing to not make a rule of thumb. So I really don't know the answer to that. It would really depend on who you're looking at. But generally, let me ask the crowd. Like I said, if you step back and think about it without emotions, you'll know. What does everyone think? If you're pre-ordering sales and you're going to show that, and think of it from a common sense perspective, how much of that ought to be credible? Why, Tom, why don't you just write here an example? It doesn't have to be yours, okay? Just write some random numbers here. Maybe everyone can, take a crowdsourced wisdom.
I think it should at least be the comparables in that space, more or less. Just.
Yeah, and what does everyone else think about that? Like a comparable, or what do you all think? Or is there a number for the comparable? What do you think? Really, there's no right or wrong answer here. I don't either, which is why I'm crowdsourcing. So feel free to share. I'd love to know what you all think. Okay, so there's not much of an answer. Maybe it's because the answer is not clear. I hope that gives you the answer. Just if you should know, and you should be able to answer, because I'm sure here there is no bell curve. It's quite erratic, and therefore I say the average of crowd is usually close to truth. So, so I'm not quite aware of the answer. If anyone else does, feel free to share with Tom McCabe. I hope I'm pronouncing it correctly. William, for seed investment, post-revenue, how ambitious should sales projections be to attract investor interest? We've had comments about projections, which are factually based, but apparently are not sky high enough. That is made up. Oh gosh, I feel your pain. These investors, what do we really want? I say we, but I'm actually also an entrepreneur, so I should say they. I don't know what I'm saying, but I totally feel you. I think, again, geography. If you were in US, please do look at very optimistic projections because of the fact that US investors will automatically discount it, thinking that you do what everyone else does. Whereas in UK, especially in Europe, you've got to be a lot more pragmatic. But at the same time, don't be pragmatic to the extent that you're playing safe, okay? Because if you, the entrepreneur with the biggest skin in the game, is playing so safe, how do you expect someone who's not yet, no skin in the game in your business yet, to not play safe? You're asking them to take a chance, right? That's venture capital. If it goes up, great upside. If it goes down, you write off your money. It's a huge chance, right? We're dealing with other people's money. It's not ours mostly. So if you're asking us to take that big a chance, shouldn't you be the one that should set an example of taking a huge chance? So if you're playing too safe, that it's not just pragmatism, you don't want to look at a positive scenario at all, because you're like, if I commit and then I'm caught, what am I going to do? Then that's a problem. But if you do what is typically more done across the pond, where you're amplifying things by several orders, that's probably not going to fly in this side of the town. So, long story short, kind of take a thing like you should have 3 scenarios: a positive scenario, an average realistic scenario that you're expecting to achieve, and then a worst case scenario, which is like if something really fails, this is what's going to happen. The positive case, don't just blow it up for the sake of it. Have some reasoning behind it. Why do you think you will achieve that? What would be the positive thing? Okay, I'm going to capture 2% of the market because this competition will not come up, and I will have enough marketing, and I'll be able to figure out this channel within 3 months instead of 8 months. And that's why it's the positive case. It's okay, even if it's high, because you thought about it, why it will be high. You didn't just pull it out of your hat. And then there's a pragmatic one, just a projection. And then there's a worst case, this does not ship, and COVID hits again, and 50% of my staff don't turn up at the factory, and this is what I'm going to do. So it should have reasoning, open to all scenarios, but with some reasoning. So long story short, nothing made up. Yes, you can be hopeful, and the hope should have data and some logic. We're in 2021. You can't just operate out of your gut like a baker from 18th century making bread. So if you do have a great use case and it's a positive projection, it's not necessarily a bad thing at all, but do you have some reasoning why you might reach that case? That's all. So that's the response. We're in the position of having closed a couple of big contracts in the same customer. This is Leon Crescenzi, that I will bring our 2021 revenues to a certain number and monthly revenues, and you're mostly profitable. You sense that investors would like to see a second or a third contract. What do you do? So my question to you, Leon, is that are these contracts with the same customers? You don't have diversity of customer. Is that it? That's it, right? You have high revenue but same customer. Yeah, that will be an issue. No matter how high your revenue is, if you have just one customer, that'll be a problem, because we will think that if this customer goes bankrupt or the CEO had a sudden heart attack and everything goes down, I hope nothing happens, but I'm just saying, then what's going to happen to your startup? So think about it. Wouldn't you do it if you were handling someone else's capital and I asked you to make this decision for me? Now I'm pitching to you, and I just told you that I made, I don't know, $500,000 yesterday from the Times Group, but no other newspaper has ever given me a contract. Will you invest in me? You would love me and you would keep in touch, but would you invest? You will say, you have so much in revenue, why don't you carry on, get another one, and then talk to me? So that's exactly what I will say to you. Get another one to show some diversity, even if it's small or pilot or paid, something. You've got something so big, which shows that you have the capability to pitch and deliver a really big one. But this could be your father-in-law, for all I know. So you're going to have to show a bit more, right? Just get a second and a third of different sizes, whatever is easy for you. And then you're in a good position, because the good thing is, with this, even though you may not land the contract, you will definitely get early and late stage meetings and with any fund, because it shows you have the capability to deliver a large piece of work, which is good. So yeah, hopefully that helps a bit. Okay. Then we have Anne Coppens. We're looking at acquiring another business with existing traction in the B2B space. We wouldn't be raising funds if it wasn't for this acquisition. For our pitch, what metrics would we use? What would you like to see in a deck? Your SaaS is pre-revenue. So normally, if you're going acquisition first, the question is, are there experienced entrepreneurs in your team? People who've done this sort of thing before? Anne Coppens. That would be, you don't have to answer. I'll just go ahead and tell you. Normally, if you're starting with acquisition first, you need to have really experienced people in the team, because it's not an easy thing to handle, integration and all of that. So if you're starting your business on that note, it's all right. I can't speak, I'm not sure if that works for us at Superseed, because we always like to see early traction and then, some sort of sales proof. And then our specialty is someone from our team will actually sit with you and help you with the first few sales before we even invest. And sometimes that means people, take a free ride and then they don't come back. That's fine, but we still do that. So we are very focused on that side of things. But generally speaking, as someone who works in this field, if you're trying to acquire and then go sky high, then an investor like Silver Lake or somebody will ask, like, who's on your team that's extremely experienced and can handle this, because otherwise this does tend to blow up. There's nothing wrong with it, but it's an ambitious plan that should be done by either serial entrepreneurs or people with lots of experience from the industry. And then it's okay that you acquire and then you grow. But if everything is fresh, the business is fresh, the founders are first time and everything is new, then this is probably a little hard to pull off without any traction. I'm not saying it's impossible. I'm pretty sure everything's possible. As I said in the beginning, everything's possible. And the whole game of entrepreneurship is, believing in the impossible. But by and large, if you ask me statistically, I would say it's unlikely unless you have those few things in place. The second thing, again, is geography. This is easier to do in US with an experienced person than in Europe, even with an experienced person. So yeah.
Thank you.
You're welcome. Then Remy, we have traction. The traction was pre-COVID, comes from an adjacent sector, which is obsolete. The investors consider traction. For reference, the product is okay. Yes, it will be considered traction, but think about it. I'm going to ask you this. When people invest in you, they're investing in the future, yeah? So I'm sure you've pivoted a bit because of this. Is that right, Remy?
Sorry, what was the question there? Sorry.
You're raising investment for your future, right?
Yeah.
Yeah. So if you're raising investment for the future and the thing that you've sold to in the past is obsolete, you must have pivoted a bit for the future.
We must have what it a bit, sorry.
Pivoted? Did you pivot?
Pivoted. Oh yeah, absolutely. So
yeah.
we're not going after tourism operators at all anymore. It's attacking different markets now. So yeah, completely pivoted.
That's great. Then that's a great story. And I would say that's a strong positive, depending upon how you position it. You can always say that, we are so resilient. We even survived COVID. Who would have seen the target sector that we were going for going obsolete? But we even managed to survive that. And now we're surviving and doing good.
Actually, that business didn't survive COVID. That business has been shut down, and we're starting again using our lead generation software, targeting markets that are now open, because tourism obviously isn't a place that we can.
Makes sense. No, I'm sorry that happened. It's no fault of yours. So two things. As a business, when it comes to the valuation and the model and everything, I don't think anyone will consider it traction for that business officially. But remember, early stage funding is about the story. It's about you. It's about the team. Almost 50 to 60% weightage on the team than on anything else. And you have a great story on how you changed and you survived and you're doing well despite all that has happened. And that's going to work greatly in your favor. So you have 50 to 60% nailed if you make it a really positive, strong story of survival. Definitely.
Okay. Thank you very much.
But if you want to factor it directly into your valuation and things like that, it probably won't, because it's not part of the business.
Super. Cheers.
Makes sense. Great. And then finally, I have this conversion risk and all of that, apply discount factor to. So some of these are very detailed. I could take it up, but it's not going to be beneficial for the bigger room. So maybe you guys get in touch with me on LinkedIn, guys and girls. I'm sorry, I keep saying guys, that's a bit sexist and I shouldn't say it. I'm sorry. So I would ask you people to get in touch with me on LinkedIn and, you know, send me some of these specific questions, because some of them are very specific and very small, and I'm trying to cover a bit more. Let's see if we have some time at the end. Thoughts on priced versus non-priced round. What is the current norm? There's no norm. Everything happens. But if your first round beyond friends and family is a convertible, as a founder, as an entrepreneur, I think that's great. I don't know what the VCs would say. I'm not sure. I'm sure they would like a priced round, but or not. But I would say if the first institutional capital you're raising up to your friends and family round is what you're talking about, then yeah, a convertible makes really good sense. Safe. There are many versions of it in the US, but here I think you have convertible. I don't know if you have safe or not. You probably do. And you can still have them SEIS and EIS advance assured. It's possible. So that's a good way to go as an entrepreneur. I would suggest that. Yeah. But I don't know what the investors would say. I think they should be okay. I don't know. Angels definitely will be okay. VCs, some maybe. I don't see. Yeah, if you're raising less than 750K, I don't see this to be a huge problem. It could actually be a good strategy. Then to supersede like Healthtech and invest in pre-revenue, pre-seed, seed stage. We do invest in pre-revenue, pre-seed, seed stage, but it all depends. If you look at our website, we're very, very clear. It has to be B2B. And it has to have a certain like ticket size. Like you can't be B2C with like ticket size so small that you're actually you can't be B2B with a ticket size so small that it's almost B2C. So it's got to be of a certain type, but we do invest in all of that. Our website is super clear. Just go read that. And it doesn't matter if you're Healthtech, if you still check those boxes, we'll have a chat. Yeah. Hi, Joita. What is your view? Hi, Julian. The last question was Jack. What is your view as an investor about a solo founder bootstrapping and B2B marketplace? My view as a founder is bootstrap as much as you can, so you can own as much as you can. Nothing like it. Like if you ask me, I'm just a huge fan of bootstrapping. I think there should be like entire courses dedicated to it in secondary school, because almost everyone's going to make some sort of a startup. I just love it because you just own so much more. You retain more of what you've built, and also you have more decision-making capacity. But it may not be possible depending upon your life situations. Like I was super young and I came from a background where it wasn't possible for me to bootstrap. I had to raise early because I had no money. So it really depends on what situation you're in. But if you can bootstrap, as long as you can, it would be great. And so your question about B2B marketplace or not, it doesn't matter what it is. Bootstrapping rules as long as you can. So that's my view as a founder. As an investor, I think we like to see bootstrapping as like a good projection of how capable you are, but we would like a piece of your business, right? So we're always going to ask you to fundraise earlier. So you know, these are conflicting hats. I'm giving you both sides.
Thanks for that. It was actually the solo founder I was interested in. What do you think as an investor about the idea of investing in just a one-man's band type thing?
No, it's absolutely fine. So I don't know if you've read this really new, amazing book that my partner keeps talking about. It's called Super Founders by Ali Tamaseb, and he's like gathered data from hundreds of unicorns and put it together. And you know, interestingly, they've found that whether you were one founder, 2, 3, 4, 5, or even 6, it didn't matter. So overall, it's statistics. It did not matter. You could actually do well. So
that was the right answer.
I don't see
Thank
a
you.
problem. So Julian, you're perfectly fine being a solo founder. You can absolutely rock it. There are many that are. That being said, it does create tremendous psychological stress, because I was one for about 2.5 years, and I think I just nearly died. I don't know how people do it. So you might want to find other ways of offloading. Co-founder isn't necessarily the one. I mean, you know, get into groups or forums where you chat, beer Fridays with other entrepreneurs, join a Chatham House group where you can speak freely, but you're legally, no one's going to coach you, or get a nice therapist, but do something, because it can be really stressful. But officially speaking, as an investor, there's no problem with the solo founder or 4 founders. They can all be fully good. Yeah.
That's great. Thank you.
That's just me. I'm not speaking for every investor, by the way. This is a bit of a profile thing, but that's just me. Probably because I was an entrepreneur before, but I don't know what everyone thinks. Maybe someone from a bank who's joined VC will have a different perspective, but this is mine. Talking about the team, Joita, does it matter about age? William, my answer to you is really sad. Statistically, it appears yes, but actually overall as a statistics of success, it does not. Founders can be successful at 55, 45, 65, 85, 16, 21. It's all possible. So I personally, and at SuperSeed, we are completely agnostic about this. We don't really care. And there's another platform that I've built called SuperPitch, which particularly funds founders that are underrepresented segments. And, you know, I just don't care about age. It's just a number, and I hope majority don't. That being said, are there unsaid biases in the industry around this? Probably. That's sad truth. We can't control it, but I hope to contribute to it and change it in some way. It shouldn't matter, but it looks somewhat that the statistics show that to some people it does, but it shouldn't. And you should be looking at funds who don't really care, because, you know, if you get funded by someone who actually cares about this, do you even want their money? Do you want them on your cap table? If you're raising a seed round and the initial plan is to fund future growth through revenue, this is from James, rather than rush to a future round, does that flag lack of ambition in today's world, or the opposite as we trade off speed for control? So you're raising a seed round and then you're funding future growth through revenue instead of rushing to the future round. So to me, it does not signal lack of ambition. It shows that you want to have control, kind of like the thing that I was just sharing about bootstrapping. So as a founder, I love that. As an investor, it depends upon your overall plan. So if your plan to go from seed to A to B or whatever, even if seed to A is longer because you're gonna, you know, bootstrap on revenue. Look, eventually what we care about is what is going to be your valuation in the future when you exit and for the next few rounds, right? Because that signals what's the value of our investment at that time. So if you look at it that way, I would say that even if you're not fundraising because you intend to use your revenue rather than fundraise, but you do it later on and you can show the scenario of what your valuation will be because of this strategy and it's still high, then it can still be positive. Just be very objective about it. If you say that I'm just doing this to retain control, not speed, I love that as a founder, but as an investor, I'm not gonna like that. So just you know, present it the way you need to get the job done. You know, you can just say that this will result in greater valuation for you because you're going to, you know, have a more valuable company with less dilution. And so if you can showcase what that scenario will look like and plot a few scenarios on your cap table or something in your valuation with market comparables and showcase that, then yeah, that works. That's the answer. So clearly not a very clear answer, just one second. Sorry, my daughter's sounds were coming through. I had to just make sure that the doors were shut. And then you had, I saw SuperSeed do not currently have any two-way markets. Do you have any opinion on bootstrapping two-way markets, which could help? So yes, because we are particular into B2B SaaS and specifically into things that have some sort of tech and automation and things like that. That's our mandate. But there are lots that do invest in two-way markets. You could look at them. Like, if honestly, there are so many. There are a couple in UK that have raised massive funds lately that invest in marketplaces. Let me know, reach out to me. I can, you know, we're very helpful at SuperSeed. If we can't invest, doesn't mean we can't help you. We are obviously going to help you, and I love to do that anyway. So if you know, catch up with me, I'll see if I know anyone. I'll introduce you, or at the very least, give you the names of who I think is doing it prolifically at the moment, who's raised funds to do it, and things like that. I might have that intel. We don't directly do it. Yeah, but obviously I'm happy to help as an individual as well as a SuperSeed. Okay, cool. So James says, thank you, makes sense. It's more dilution than control. Okay, great. I think we didn't have to cover the rest of the questions because we covered everything except for,
I think we covered a lot of the questions through the Q&A, but could
Yeah.
you expand a bit more on what type of customers to chase and when? So you talked about how even if you have 500,000, if it's only from one customer, that's not great. So should you prioritize going after the big fish or smaller paying customers that are easy to get? How do you view that?
So I'm going to answer it more as a founder than an investor, because if you make good business sense, then it doesn't matter who you talk to, it's going to work. What makes sense for your business is really important. If you're selling something that's going to be of value to big guys, but you're somehow rushing to get 5 logos, and so you're selling to small guys, it's not going to make sense, because we can see through that. Anyone can. You can probably. Your friends can. So we can. What's going to make sense for your business? If what makes sense is you are an algorithm for changing supply chain, and therefore your only real customers are only going to be particular type of supply chain. But here you are selling to, I don't know, a software company because it was your friend's dad. That's perfectly fine. You do the first few sales like that. But when you come for pre-investment, have something that is already representative of what makes sense for your company. So if what makes sense is a certain size and type, seed, small part of the plant, right? Show what is that seed that will become a plant, whatever that seed is. The word itself is self-explanatory. So it's not who to prioritize, it what makes sense for you. At the same time, you have a business where you're going to sell to SMEs, okay? Because it's, I don't know, HR software for SMEs, example. Then your traction, whatever the first 5 were, that was friends and family. When you come for investment, at least 2 or 3 should be SMEs, right? It doesn't matter how much money you made off of them, but they should be representative of what you're doing. The question is it representative of your future? Because when you are raising seed capital, you're raising capital for the future. Do you have something now that shows the future? That's why it's called seed. What will become the plant? Do you have something that shows that? So what you have is a seed, but of a completely different plant. But what you're claiming is a bougainvillea, but the seed is of that of a mango. Then it doesn't matter whether you got customers or you didn't. Somewhere or the other, the thesis will fall through in some of the rounds. And if it didn't fall through, then you probably have investment from people who are not very critical. And you don't want those sorts of investors. That in the long term, it doesn't work. If you have non-critical thinkers sitting in your board or in your cap table, it's very painful. You want people who actually add value. You want clever, sharp, intelligent people who help you build the business. And they will, and if you want those people, they will be very good at assessing it as well. So, you know, it's a two-way sword. If you kind of like manage to fool them and get it, is that the type of person you want in your company who you know, will ask ridiculous questions for the next 5 years? So if you want sharp, good people who will add value, then they will assess very cleverly as well. So get customers that make sense for you. If your business is going to make the first 3 million from SME, then it's SME. If it's going to make the first 1 million of ARR from mid-cap, then mid-cap. If it's big, whatever. The quantity may be small, but it should be representative of the future. That's all. So chase whatever makes sense for your business. That's all.
I think we've got one more question coming in from the chat. A good question from Henry on the NHS.
Yeah, we've had great traction with the NHS and doing a good job. Henry Majid. Henry, have you met before? Henry, have you met before at Oxford or SBS or somewhere that I teach? Or
Hey Joy, yeah, we did MBAs together, and I still teach on the SMI course with Mark, and yes, we hang out.
Yeah, I think because that's what I thought, that I've heard your name. So NHS, do you know about the Hill, the accelerator at NHS?
We've been involved with a few different accelerators there.
Okay.
We've just grown
I
so
only
fast.
asked because I am an advisor to the NHS for startups that are involved in the Hill, and I didn't see yours, and you said NHS. I was just wondering which one you're in. That's all right. So your question is prioritizing a good job rolling out with them rather than overspreading across enterprise clients. How might investors consider this mega versus many going into pre-seed? So if you are involved with NHS, the type of funds that will invest are different class. Okay, there are investors who don't fund, public sector type of customers. And that's quite a lot of UK funds. But then there is a small niche pool of capital that is only for But then there is a small niche pool of capital that is only for companies like yours. For them, it'll probably be okay. But if you go out to the standard venture capital firm that doesn't look at that, then maybe not. Then maybe they will look at some variation and things like that. But NHS being a captive audience, and on the public sector side, there are VC firms that will invest in that. They have mandates to invest in those sorts of things. When you look at them, I think it's probably okay. Henry, if you reach out to me, there's someone called Megan Morris-Carter. She runs the Hill Accelerator for NHS. I don't know if she was in Oxford around the time that you were there, Megan.
I know Megan. I didn't realize she was at the Hill, but yeah, I know.
Yeah, so she's a very good connection to answer these questions. She's solid with NHS.
Okay, and the NHS aren't our only client. It's just that we've been turning down other multinationals because we've just said we want to prioritize the NHS and scale out across NHS England before we risk diluting our resources for the others, and partly because it's just so important in mental health and well-being is the area that we're in, and it's so important in the NHS, so we prioritize.
Super exciting and nice to see you here.
Yes, Angie, thanks so much for your time. I'm sorry that I've been off camera. I've got a giant cat that's been trying to join in. So
I don't have a cat. I have a girl that plays the role of several cats and many things at the same time. Okay. Anybody else's questions? We have last 10 minutes, or anything generic from Margaret or Purdy?
I see Don has his hand raised. So Don, do you want to jump in?
Yes, please, Purdy. Hi, Joita. Quick question, just I know you've covered age already, okay. I've had a lot of startups over the years. They've all been offline, just traditional mom and pop type operations. Some of them scaled quite large, sold for a lot of money. I'm finding when I approach investors, my age definitely comes against me. I'm almost 60. My team are quite young. But they don't have the experience. What would your thoughts be around the best way to, for want of a better word, present myself when I'm going for investment for something that's very tech-based?
Yeah, I hear you. And like I said, it's sad that this is the case. We definitely don't do this at Superseed, that's for sure. And that Superfish that I co-founded, I actually co-founded it for underrepresented segments, including people above the age of 45. So I strongly feel like this should not be a problem. But is it already a problem? Yes, it's like the many biases we wouldn't like to have that exist. So I'll answer this the same way I answer a question where something's happening that shouldn't ideally happen, and it's a socioeconomic issue. And this is something I used for my own fund. I did not want capital from people to whom I had to overcompensate or in some subtle ways be more than what an average founder was required to be to meet criteria or some milestone, just because I'm a woman or I'm a brown woman or a techie. I didn't care, even though there were a lot of people who I thought were signaling like that. I just didn't go for it because I did not want those capital. In the end, the capital that I ended up getting are from people who actually are true meritocracy valuing sort of people. And so my answer to you would be, as hard as it is, and it breaks my heart to hear that this is true, because I know it is, and I can feel you. Your experience is real. Your reality is absolutely spot on. It probably definitely happens. And I'm not you, so I've not felt that, but I felt it in other ways, so I can understand what you're saying. My answer to you would only be that you will end up getting investment from people who don't care about it, who are the right type of people to get capital from. So that's the only silver lining in all of this. How do you get around it? I would address it upfront. Like you just mentioned, that I have a youngish team and this is me, and you can address it in a casual manner right at the beginning. I believe in controlling the narrative and letting people taking charge and describe things the way they want to. If you know there's an elephant in the room, then you should be the one who should bring it up. Just say that I know that I'm not necessarily the ideal age group that people like to invest. I don't know if your fund thinks like that. By saying that, you already bring it out and they'll immediately go like, oh no, we don't care as long as it's a good business. And you've kind of made sure that now they have to be objective, but bring it up. If you're not very sensitive about it, just bring it up. I wouldn't work around it and hide it, because it's a positive thing that you have so many years of experience, and that you have that you're now trying to give back with the decades of experience to build something. And this is not something that you should be hiding. This is something to be proud of. And so bring it up, highlight it, and say that I would love this to be a positive factor in our discussion, that I bring so many years of experience, rather than a negative, that I'm not in the ideal age group that you look at. And I'm pretty sure whoever's at the other end, the first thing they'll say is, no, we don't really care as long as it's a good business, which basically means you've alerted them to the fact that even if they do have a bias, they now have to be careful to not apply it to you. And that's how I would address it. But of course, it's your style, it's your truth. So the way you want to say it is up to you.
Yeah, thank you. I really appreciate that. Yeah, I'm not whining about it. I'm just mentioning it as a harsh reality of the world we're in. I'm finding kind of a better response in the US, actually, to be truthful.
Yeah. I mean, it's just, these things are all true. Should they be true? No. But are they true at the moment? Yes. How can we change the narrative? Just address it head on. That's what I've done all my career. I just
you're right.
address it.
You are right. Yeah, call the elephant in the room definitely helps. Yeah, thanks for that, Julie.
But also just reach out to me if you do want to connect to other founders who are above the age of 60. I know quite a few. So Hagan Bailey, who's founded Oxford Nanopore, which is $1 billion company now, was in his 80s. He was actually my first ever boss to teach me what it's like to be an interim CEO. Although I didn't know anything about pharma, he hired me. And I know a bunch of other people, quite a few of my family who are above the age of 60 are angel investors and co-founders in lots of tech companies. I know lots of women in their 60s building amazing tech companies in the US and here in UK. And I have a group as well where I can connect you. So if you reach out to me on LinkedIn, you can find camaraderie. And some of them have gone on to build huge companies. They've made sure that it didn't affect them. Maybe that will give you some consolation. So feel free to let me know if I can help.
Thanks, Joita. Thank you.
Yeah, you're welcome. Okay, so last 5 minutes. I hope that was useful. If you guys have any feedback for me, anything that I missed out or I said that you just completely disagree, something I need to learn from, I would love that. So please let me know. Absolutely open to it, honestly.
That was fantastic. Thank you so much, Joita. I really appreciate you giving the talk this morning. And where's the best place for founders to reach you?
LinkedIn, and I'll hand out my personal email as well, which I'm very attentive to, but LinkedIn as well. You can always find me there, connect me. If you find that you don't have any connections and so you can't add me, then drop me an email. I'll give it to you to Purdy and Margaret, and you can send it around. Because I have like lots of these other things where, like I was telling Don, I can connect him to, then Super Pitch is one that I run for underrepresented founders, but I also, I'm an advisor to NHS The Hill. I also guest teach at a couple of Ivy Leagues, including Oxford and a few in US and things like that. So there are groups where I can find, if I think of something that can be beneficial to anyone who's stuck here for some reason, I can do that. So if you reach out to me, I'll think of something if I can and connect. Otherwise, if you're reaching out to me to give me feedback, please absolutely do so. You heard something and you thought that's not the whole thing, your experience is different, or you know differently and you disagree, I would love to hear from you, because that's the journey to grow. There's, can't really know everything. Pretty sure I'm wrong on so many things. So if you care to let me know, I would love to grow. Thank you.
Thank you so much. I might be going out on a limb here, but I know you mentioned the pitch event in August for underrepresented founders. Do you have any openings, or do you think it'd be relevant to anybody in this group?
Yeah, so anyone here who feels that you're underrepresented in whatever way, age, gender, orientation, ethnicity, whatever, if you think you're underrepresented, I'm not even going to validate that. Just go ahead to superpitch.co.uk and upload your video pitch. We have an event coming on 20th August. I usually host it twice a year. It's a free event. I basically just do it because it's just a cause I really care about. And I connect all the people who pitch to investors across the world. So from Canada to Dubai to New Zealand, the top funds of East and West Coast, and lots of funds in the UK, they all turn up. So if you wanted to be on that platform and pitch to them, you can do that. You don't always have to pitch for money. If you're not looking for capital, you can say other things, that you're looking for collaboration or sales or advice. That's fine. So you can do that. And the reason for building Super Pitch was using technology to level the playing field. When you're always traveling and meeting people face to face, it's not always easy. If your life situations don't permit that, or you don't live in a geography that's great for that. So let's say you have an idea and you live next to Stanford, it's a completely different story than you have an idea and you live in southern Greece. And also it limits a lot of things, like, biases creep in. If your economic situations don't allow you to travel really far every week or every month, what happens? So video platform kind of levels that, and it also opens you up to a global pool of capital. There are investors across the world looking for great deals and they don't have enough in their geography. We would love to do that. So that's what Super Pitch does. It's a 3-minute video pitch platform to connect early stage founders to investors. We over-index on underrepresented founders, but everyone's welcome to pitch. And the other thing I would like to share with all of you is, if you're all founders and you're building something, it's a hard journey. And some of us deal by ranting about it, and some of us deal by saying it's easy, it's fine. That's just coping mechanism. The truth is it's not. It's incredibly hard, no matter who you are, what you're doing. So congratulations on making such a bold choice, no matter where you are in your life. The fact that you did it, that you made that call, and you're working with Purdy and Margaret, two fabulous women, and trying to build your business is a big step. So congratulations on being so bold. And whether it succeeds or it fails, I hope it all succeeds, but whatever happens, the fact that you made this decision is going to make you so much more confident and powerful and emotionally resilient in future you cannot imagine. So either ways, you can't lose. So best of luck.
Fantastic. Thank you so much. I wish we were in person and we could all give you a big round of applause.
Oh, thank you.
Great. So we will ask everyone to stay on for a minute or two to go over a few announcements. Joita, you're welcome to log off now. Or you can stay on if you want to hear announcements. Bye. So, thank you. Okay, so a few quick things. Next week, our last week of Seed Sprint, we are going to be doing 2, maybe 3 live workshop clinics. We have forward partners coming in, and we have a deep tech angel investor as well, but he has a wide expertise. So he is going to be focusing on B2B startups. Then we have forward partners focusing on B2C. We're going to be asking 3 or 4 startups for each to live pitch the investor, and they're going to go through your deck with you, give you live feedback on the spot. So if you are feeling particularly bold and are willing to put yourself out there and in exchange get great exposure with forward partners and other investors, fantastic. We might be calling on a few of you this week. In order to be eligible to live pitch for this event, you need to have submitted your weekly updates. So that's a very non-subtle reminder for those of you who didn't get it in this week. Most of you did, the vast majority of you did. So thank you very much for that. And then we will also be chatting more about Demo Day and the investor founder speed dating event. Those 2 things that will be happening in September. We'll be announcing more details on that on Friday. Last reminder, tomorrow at 10 a.m. we have Richard, who is the speaker for week 1, back. If he's going to host an open session for anyone who's interested in AWS credits. He got a lot of outreach from people in Seed Sprint asking for a bit more information about it. So he's just going to host a quick little workshop to go over the details and how you can activate it and the sort of benefits you can get. And we do have free credits available for everyone who's in Seed Sprint. So I think that's it. Tomorrow, 10 a.m. Same Zoom link as this session. The link is also in the newsletter that went out. You don't need to sign up. You just hop on the Zoom link and that's it. I see a few people who are just dropping me messages now. So when we log off, we'll unfortunately lose all of this. So if you message me and I don't get a chance to respond, please text me or email me as well. I think that's it. Purdy, did I leave anything out?
Nope, all good.
Fabulous. Okay, great. Thanks so much, everyone. I will see you back on Friday.
Bye.
Or maybe tomorrow at 10 a.m.
Thanks, everybody. Bye.
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 Thank you. Bye.
Thank you.
Bye.
Bye.